How to draw trend lines perfectly every time. Trend lines are a key part of delving into technical analysis and trading off of charts. When used correctly, they're a helpful, clear, and relatively simple tool for traders. Trend lines have become widely popular as a way to identify possible support or resistance. But one question still lingers among traders: how to draw trend lines perfectly. In this video, we will discuss what trend lines are, as well as how to draw them. I'm also going to share a secret way that I like to use trend lines to spot potential tops and bottoms in a market. So be sure to watch the video in its entirety. So, what are trend lines? As the name implies, trend lines are levels used in technical analysis that can be drawn along a trend to represent either support or resistance, depending on the direction of the trend. Think of them as the diagonal equivalent of horizontal support and resistance. Trend lines can be used to identify and confirm trends. A trend line connects at least two price points on a chart and is usually extended forward to identify sloped areas of support, or uptrend line, and resistance, or downtrend line. Uptrend line. An uptrend line has a positive slope and is formed by connecting two or more low points. The second low must be higher than the first for the line to have a positive slope. Note that at least 3 points must be connected before the line is considered to be a valid trend line. Uptrend lines act as support and indicate that net demand is increasing even as the price rises. A rising price combined with increasing demand is very bullish and shows a strong determination on the part of the buyers. As long as prices remain above the trend line, the uptrend is considered solid and intact. A break below the uptrend line indicates that net demand has weakened and a change in trend could be imminent. Let's take a look at a trend line that was drawn during an uptrend. Notice how in this GBP/USD daily chart, the market touched off of trend line support several times over an extended period of time. This trend line represented an area of support where traders can begin to look for buying opportunities. Downtrend line. Now let's take a look at a trend line that was drawn during a downtrend. A downtrend line has a negative slope and is formed by connecting two or more high points. The second high must be lower than the first for the line to have a negative slope. Note that at least 3 points must be connected before the line is considered to be a valid trend line. Downtrend lines act as resistance and indicate that net supply is increasing even as the price declines. A declining price combined with increasing supply is very bearish and shows the strong resolve of the sellers. As long as prices remain below the downtrend line, the downtrend is solid and intact. A break above the downtrend line indicates that net supply is decreasing and that a change of trend could be imminent. Let's take a look at a trend line that was drawn during a downtrend. Similar to the GBP/USD uptrend in the first chart, this AUD/NZD downtrend touched off of our trend line several times over an extended period of time. The difference is that the trend line above represents a downtrend, during which time it acts as resistance, giving traders an opportunity to look for selling opportunities. And now, how to draw trend lines perfectly. Now that we have a good understanding of what trend lines are, let's go over how to draw them. The very first thing to know about drawing trend lines is that you need at least 2 points in the market to start a trend line. Once the second swing high or low has been identified, you can draw your trend line. Notice in this chart, we have 2 main points at which we can start to draw our trend line. Once this level has been established, we can start to look for bullish price action to join the rally. Sure enough, just a few weeks later, a bullish pin bar emerged at trendline support. The bullish pin bar above provided a signal to traders that the trend line was likely to hold. This gave traders an opportunity to buy at support to join the rally. 3 keys to drawing trend lines effectively. There are 3 very important keys to drawing perfect and effective trend lines. First, the higher time frames will always produce the most reliable trend lines, so start there and work your way down. Second, most trend lines you come across will have some overlap from the high or low of a candle. But what's important is getting the most touches possible without cutting through the body of a candle. Third, never try to force a trend line to fit. If it doesn't fit the chart, then it isn't valid and is therefore not worth having on your chart. So let's take a look at each of these in greater detail. First, Use the higher time frames for drawing trend lines. Just about everything I do in the Forex and stock market begins on the daily time frame, and drawing trend lines is no exception. One reason I prefer the daily time frame for drawing trend lines, besides the fact that I do most of my trading from this time frame, is that it represents an extended period of time. This brings me to a very important rule regarding trend lines. The longer a trend line is respected, the more important it becomes. A trend line that extends over 2 years will always be considered more important than a level that only extends the course of 2 weeks. Here is a great example of a trend line that was drawn from the daily time frame. In this GBP/CHF daily chart, after the second swing low was made, we could have drawn our trend line. Notice how the market formed a bullish pin bar at the third touch from this trend line. This is a perfect example of the type of buying opportunity a trader would look for using trend line support. Another higher time frame that I like to use to draw trend lines is the weekly chart. This time frame is great for identifying potential targets during uptrends or downtrends on the daily time frame. Here is a great example of how a weekly trend line on USD/JPY can be used to identify a potential target. The chart shows a weekly trend line that can be extremely useful to identify a potential target for USD/JPY. The daily time frame is in an uptrend at the moment, so this weekly trend line would give us a great starting place to look for a potential profit target. Second, trend lines and overlap. One of the most common questions when it comes to drawing trend lines is, should they be drawn from the high or low of a candle, or from the open or close of the candle? The answer to this question depends on the trend line. It's very rare to find a trend line that lines up perfectly with highs or lows. Similarly, it's rare to find a trend line that lines up perfectly with the open or close of each candle. Let's take a look at an example. Notice how the trend line does not perfectly line up with the highs of each candle, nor does it line up perfectly with the open or close of each candle. This doesn't mean that the trend line is invalid. The most important part of any trend line is to get the most touches without the level cutting off part of a candlestick. If you find that a trend line cuts through the body of a candlestick, then the trend line is likely not valid. Third, never try to force a trend line to fit. This is perhaps the most common pitfall Forex and stock traders make when drawing trend lines. We call this curve fitting, and it happens when a technical trader is so convinced that a level should exit, that the trader begins to try to make the level fit the price action on the chart. This brings me to the most important part about drawing trend lines, or any support or resistance level for that matter. The best trend lines are the most obvious ones. So, if a trend line doesn't fit well, it's probably best to move on to another pattern. And now, how to use trend lines to spot potential reversals. As promised, I'm going to show you a way that I like to use trend lines to determine the strength of a trend. Moreover, this method can help you spot potential reversal points in the market. At this point, you know that a trend line can be used to identify potential buying or selling opportunities. But this only works as long as the market continues to respect the trend line as support or resistance. So what happens when the market no longer respects the level? This is where you have a chance to trade a market as it makes a turn from a major swing high or low. Here is an example of a market that broke trendline support and then retested that same trendline as new resistance. We can see in this GBP/CHF daily chart that the pair had respected a trend line for some time. However, once the market broke trendline support, it quickly retested former support as new resistance. This retest gave traders the opportunity to sell the pair, which would have resulted in a substantial gain over the next several days as the market sold off. One thing to note about using trend lines in this way is that it works best when you have a really clean trend line with 3 or more touches. The more obvious the trend line is, the better this strategy will work. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot the auto trend lines indicator perfectly on your charts. So there's nothing for you to worry about. Get the download link on the description. Here are other examples of how to draw trend lines perfectly in Forex, stocks, and all financial markets. Use trend lines to alert you of potential trade opportunities, and use price action signals to determine exactly how to seize those opportunities.